Hello, my name is Peter Bricks. I'm a bankruptcy attorney here in Atlanta, Georgia. I have offices in Dunwoody, Woodstock, Cumming, and Jonesboro. I'm here to talk to you today about whether you can keep an income tax refund while you're in bankruptcy. But first, I want to issue this disclaimer. We're a debt relief agency proudly assisting consumers in filing bankruptcy under the U.S. Bankruptcy Code. However, there's no attorney-client relationship with the viewer of this message, and we would have to meet with you individually to offer you applicable and accurate legal advice. So the topic today is, can you keep an income tax refund while you're in bankruptcy? Let's first discuss the scenario of a Chapter 7 debtor, and then we'll move on to Chapter 13. Regarding Chapter 7, uh, essentially, if possible, the easiest thing to do is to uh, collect your tax refund before you file bankruptcy. A lot of times it's used to pay your bankruptcy fees, your court costs, your attorney's fees. It might be might be used to make your mortgage payment or your car payment right before you file. But the point is, if it is an asset you acquire before you file bankruptcy, it's not part of your bankruptcy case. Now, if there's the second the money is paid to you by the IRS or your state agency, it's now a different kind of asset. It's checking account money. But my point was, you could spend it down on appropriate measures. You can't gift it to your brother, things like that. But if you spend it on appropriate measures, and that's a whole nother topic for another day as far as what we call exemption planning, it is not an asset of your bankruptcy case. So if you get the refund before you file Chapter 7, we've taken it out of, can I keep my refund? Now the question really is, if part of the refund's left, can I keep the cash that the refund became? And that will depend on how much you can exempt under your state or federal exemptions, depending on which exemptions you're using. You might have spent it all, so there's nothing left. Now let's take the scenario where you file Chapter 7 and your refund is due to you. You had another reason to file. You couldn't wait. You had a garnishment, a foreclosure, getting sued, etc. So you must list it as an asset on your Schedule B, your personal property. Now the question is, on your Schedule C, where you list your exemptions, can you fully exempt it? Well, you'll have a certain amount of property you can exempt. And so let's say under your state or federal wildcard statute, you have $5,000 left you can exempt. If your tax refund is $3,000, that's under $5,000, therefore you can fully exempt it. If, say, your tax refund is $10,000, though it's usually not that high, but if it is $10,000, and you can only exempt $5,000, then your trustee will have dibs at the $5,000. Depending on your specific trustee, you could theoretically have a trustee who doesn't want to liquidate, doesn't want to create a estate for the creditors for $5,000, or maybe a better example would have been your refund $6,000 and you could fully exempt $5,000, and it's just not worth the time to create a bankruptcy estate for $1,000. But in that case, the refund, sometimes I'll have clients say, well, how about I just don't file my tax return? Let's say we're at April 11th, they're filing bankruptcy, and they say, well, maybe if I just don't file my tax return, I'll get an extension file, in September. Can I keep the refund from the trustee? Absolutely not. The refund became an asset on January 1, when your tax liability for the year was determined. Whether you filed your tax return February 18th or June 18th or whatever, the asset did not change. The asset was the amount of the tax refund. Now, the only way to alter it would have been to actually file, as I discussed earlier, filing the tax return, getting the refund, and spending it before you filed the bankruptcy. Now let's take the scenario of a Chapter 13 bankruptcy. So you're in bankruptcy and you are in a Chapter 13, which is a 3 to 5 year repayment, and now you get a refund here in year 1. This is going to be very district specific, meaning what I do here with my clients in the Northern District of Georgia might be entirely different from what you do if you're in the Eastern District of Tennessee. But here in the Northern District of Georgia, we typically have no problem with clients getting tax refunds if they're $1,500 or less. If they're more than $1,500, you would have to have a special reason. Kid got braces, car broke down, $2,000 in car repairs, some sort of reason that you really need that money. And then the other hurdle would be, what if you were behind? You were behind on your trustee payment. So you pay the trustee $750 a month and you missed two payments and now you have a $1,500 tax refund. Well, to keep your case active, you're going to need to forfeit that tax refund over to make up for your missed trustee payments. So it's very fact specific, but at least where I practice, there's no issue with you keeping a tax refund if it's in a Chapter 13 if it's under a minor amount. And this is true whether you brought tax debt into the bankruptcy. You owed IRS when the case was filed. The tax refund is a post-filing asset, and you would presumably be able to keep at least a portion of it while you're in Chapter 13. Now, depending on your district, you might have to file a motion to retain a tax refund, and your attorney will know more about that. But that covers how to whether you can keep tax refunds while in bankruptcy.